Good morning, Bob. Trade Genius, the 28th of July. It's July. Gosh, almost August. And I titled this video, For Whom the Bell Tolls, for the FAANG stocks. And the reason I did that is because I think we're at a watershed. So up until this point, basically the social media darlings and big tech really dominated the markets, and their revenue growth rates have been nothing short of spectacular. And in the last 6 months, they basically left everybody else behind. Financials started to creep in a little bit here of late, but mostly it's been the FANG stocks. And the reason for that is that when you get to an end of cycle, people will pay for anybody that's growing. And then number two, passive management of brokerage accounts and central bank buying of indexes created an imbalance with these stocks. Now, that's all good, and that's why things have been just swimming along here while everybody's jaws are slack, because how can they just keep going up? I mean, you're talking companies at 8 and 9 times sales. You'll never, ever return the cash to your investors for what the market cap is right now. And I know people say, "Oh, it doesn't really matter." Well, it will matter here very shortly, and I'll tell you why. So the FANG stocks are suffering from what's called the law of large numbers. And so I'm just going to go through here and just talk to you what that means. So you got Apple, right? Almost $1 trillion company, pretty profitable, all right? The handset and the phone market is now saturated. The biggest market opportunity in the world is in China. And the Chinese are competing with them with their own handsets. And I don't think Apple can count on the Chinese market to pull them through. And I think you're going to see that starting to fall. And people are saturated with computers. And the millennials, as you see now, if you look at Netflix and you look at Starbucks and you look what's going on with Facebook, is that the millennials are pretty much, they're tapped out. There's no growth in them anymore. And that was supposed to be the echo of the baby boom echo, okay? And they never had any cash or capital, and they're barely subsistence living, with the rents and healthcare just absorbing all their spending power, and then they're just not getting paid. So Apple's, I think, is last hurrah, and if they beat this quarter, they're done. So if they get to $1 trillion market cap, they're done. This is the last hope for the market here, is if Apple does some crazy kind of beat, and all eyes will be on them on Tuesday. But I think people are getting nervous. Amazon, look, they're 50% of the online retail market already. The economy, this 4% GDP thing is a misnomer. They dragged probably 2% of it forward from the Chinese buying soybeans ahead of the tariff war, so they could say they're not buying soybeans. And that's a story in and of itself. And so it's unclear to me where Amazon's going to keep going. I know they keep trying to get into other people's businesses, but I think you're going to see a more activist president here against them. He already doesn't like Bezos. He doesn't like the Washington Post. And I think he would love nothing more than to put Amazon in his gun sights for antitrust violations. So, and Amazon, just quite frankly, is obscenely overvalued. They've simply been given a pass here for reasons unknown. And, I could grow revenue in my company ad infinitum if I didn't have to worry about making money. And these guys don't. They just kept getting cash, and then whatever cash they get, they put back into the business. But the key is, at some point, you have to have free cash flow that's sufficient enough to justify what the company's worth, or it's simply not worth that. If you're just a cash machine that you just keep putting in other things, but you never ever are in a position to distribute the cash, then you're not worth what the market is giving it to you. And again, these markets are not, they're not self-correcting. They're being manipulated by central bank buying and by the market cap weighting of the indexes. So when those things unwind, you're going to see these things fall really fast. And Google and Facebook and Twitter are all in the same business. Somebody coined it today, I saw on Twitter actually. They call them they're billboard companies. Basically, they're advertising agencies. And the premium PE they're getting for that is just mind-numbing. And these three companies are worth more than twice what the whole spend of advertising of any sort worldwide. And so these companies can never hope to grow their way through their stock price. And Facebook already said, look, they're going down to the low single-digit growth. You know, Twitter had a poor report. I don't think eventually I don't know what's going to happen to Twitter, because they and Facebook and YouTube for that matter have gone out of their way to make it difficult for certain segments of our society to be able to express themselves. And those folks really have the cash flow. And if you start telling people they're not welcome at YouTube or at Facebook or at Twitter, eventually you're going to get left with a lot of poor millennials that don't pay for anything and won't buy anything that the ads are trying to connect with. And the whole thing implodes. And you're already starting to see it. Twitter had a bad day too. And so it's I look for all these to start dropping extremely low in terms of revenue growth going forward. Microsoft's probably the most diverse, but they're just overvalued. So, and they've already had their echo from the 2000 crash. But, you know, of all of them, Microsoft would be the only one that I'd be interested in holding if I was holding any of these. But still overvalued 5-10% right now. Facebook, I think everybody knows about Facebook. So Facebook has an issue with, they hate half their customers. They're already own the market, and ad spending is going to be reduced, and ad agencies are going to start spending a lot more time auditing because of all the quote-unquote fake people. You talk about fake news, they have fake people. Same with Twitter. So these are things that people have to worry about, and they're not going to get paid. They're definitely not going to get paid what they think they should be getting paid, because people are going to start questioning their reach. I'm going to skip BABA for now. Okay, here's SPY. I'm just going to get to Netflix. Here we go. So Netflix is already rolling over too. So that's what I was talking about earlier. So you got Netflix, you got Starbucks, right? And you have Twitter and Facebook. These are all where the quote-unquote millennials supposed to be hanging out. And that growth has been tapped. And so I would be really concerned. And the thing about it is, you can say, well, I don't own any of those. If you own any indexes in your portfolio, you own these guys. In fact, I think I read there was over 50 hedge funds of significance and mutual funds that are holding the FAANG stocks as their largest holdings. And when this thing unwinds, two things are going to happen. Is people are going to start telling their financial advisors, get me out of this stuff. And it's going to cause more selling. At the same time, people are going to be selling because the market's going down. So you're going to get a double whammy here, and that's what really starts causing a panic. So anyway, just something to keep in mind and we're very, very concerned about. And if you want to follow along what we're doing, we have some great ideas for how you can crash-proof your portfolio. And we talk about it every day. So tradelikeagenius.com if you're interested in anything we do. We're running some really good specials right now, and we appreciate you listening. Thanks. Bye-bye.